Ladies and gentlemen, thank you very much for your time. Before we start, I'd like to thank Dealflow Group for creating this opportunity for us to be here, and the AC company who's making this ambient temperature for all of us so we can tolerate the weather outside. My name is Manuj Grover. I'm one of the co-founders and head sales guy at Public Yield Capital. We're essentially an investor outreach platform, and we provide white glove service to help issuers connect with their investor leads and engage with them. Today, we'll be discussing, well, let me read the title. It says, See a Tree Within the Forest. So essentially, how do you separate your tree from the rest of them? How do you stand out in front of this large crowd of potential investors, other distractions online, and other forms of media? On the panel today, we have 4 very seasoned people with a lot of experience, not only in marketing, but in the capital markets. Gentlemen, if you may, please introduce yourselves and what you do.
Hey everyone, my name is Jason Fishman, founder CEO of DNA, operating out of Los Angeles, California. I've worked on over 400 Reg CF, Reg A Plus deals that have collectively produced 9 figures of capital across content, advertising, and outreach. Going to be going into some of those discussions here today. Also host of the Test Optimize Scale podcast. Some of our best episodes have guests that are participating in today's event. Excited to talk about how your campaign, your raise could stand out among all of the others. It's really the top 10% of deals that move, and have a lot of analytics to throw at you as well. So we're going to get in depth, and that's me.
Hi, I'm Jason Cherubini, CFO and co-founder of Dawn's Light Movies, as well as executive in residence at Loyola University, Maryland, where I teach and research equity-based crowdfunding.
Hello, my name is David Shapiro, the CEO of B2I Digital. I always coach CEOs on keeping your pitch succinct as to what you do. Our company name says it all. B2I is in business to investor digital marketing, generating awareness for public companies or raise capital for private companies.
Hi, my name is Seth Farbman. I stand before you today, or sit, wearing 2 hats. I'm the founder of a company called VStock Transfer. We work with about 900 publicly traded companies, many of which started with us at that pre-IPO stage, and also founder of a company called Share Media, where we do LinkedIn marketing for CEOs of companies that are looking to access the capital markets.
Excellent. Thank you, gentlemen. As y'all I've heard, these are very seasoned individuals, many years of experience, and I bet you have learned a lot from when you've started. So the first question I would put out there, as we've had many presentations from many CEOs and executives of issuers, for the successful ones, and based on your interaction experience, what have you seen that is a commonality with them that helps them stand out and actually execute in this, either in their business as well as in these crowdfunding campaigns? Jason, you want to go first?
The most proactive founders have the most successful raises, period. Looking at Seymour from MagFast here, I can name 5 others that I see in the crowd. If you think you're going to list your deal online and it's going to do $5 million in 30 days, you're probably wrong, statistically speaking. Even looking at the amount of Reg CF deals that produced $5 million in 2023, less than 1%. You need to drive as much traffic there as possible, and you need to be providing constant updates. When we work with a founder who, every week is speaking at a new conference, guest on a new podcast, they put together a new partnership, they're talking about new product innovations, new team additions, we know we have a lot that we can work with in terms of the distribution that we're doing across content and advertising channels. And that's what audiences are going to relate to. It's not just your logo, it's not just your product, not just your numbers at that, but who you are. They want to feel, using these digital tools, that they know you. Digital allows for scale, but that offline touch, that's what we thrive on as humans. And if you're able to have that encapsulated into digital formats and then drive thousands, hundreds of thousands, millions of prospective investors there, you're going to be in a much better place. But they want to know who's driving the ship to that destination.
Please.
Well, I heard a few people say this earlier today, which was very warming to hear, but it's about treating your investors in a similar way to you treat your customers. What is your value proposition for those investors? So as you're going out on the raise, essentially tailoring your raise, tailoring your campaign for the types of investors you're looking for, and the most successful in those raises are those who know exactly the investors they're looking for early to lock them up before they go with the shotgun approach to try to get everybody.
To add to what you guys said, Jason and Jason, I echo those sentiments as well, but to add to that, people want to invest in a real company, have a real concept idea, prove that it works. Think, would I give this company $1, $1 million? If you want to invest in it yourself, if you're objective, then why would anybody else? Build the company, get to a point where you've proven the concept, proven the product, proven that people are willing to pay you a little bit of money for it, and then people will invest in you. So think about it yourself. I could choose Apple. I could choose 5% CD. Why would I invest in this company? Show me that it works.
I think the common theme that I've seen over some of the successful campaigns really comes down to the way that the company presents itself. Everybody on this panel has a specialty of some sort, but at the end of the day, whether the issuer is selling widgets, medtech, biotech, pharma, that should be secondary. You need to be a media company. You need to be storytelling constantly through whatever medium you feel comfortable with or you see success with. But too often, companies will just look at themselves as that widget company or that medtech company. And when you're raising capital, that is, you have two full-time jobs. One is, as many of you know, raising the capital, running your business, but really it's all one. It's telling the story and telling it the right way to the right audience.
So I see here, everyone, that one common theme is about when a company is selling themselves and people invest in people. So the core is that every person who wants to raise capital, especially in our ecosystem, has to be out there presenting themselves. The only thing I would add to this is what I call the mom test. The only person who unconditionally loves me is my mom. And when I started my business, my company I was with folded. And I said, I'm never gonna get fired again, or never gonna let go again. So my wife was pissed off at me, so I went to talk to my mom, and she gave me $40,000. My mom's 73 years old. She was basically on workers' comp, and she had enough confidence in me to go take a cash advance at 0 interest on her credit card for 40 grand and wired me the money within a week. And now I'm sitting here in front of all of you. So the way I look at it is that if you can convince your mom, who does love you, but you can give them the confidence that your concept is good and that you're gonna put all your fortitude in excelling and succeeding, then you can take that same passion and share with everybody else. And as a result, you have something to, I'm telling you a story. I have a story to share. And if people believe in that, then they'll believe in you and hopefully put the money where their mouth is. Seth, you mentioned while you were speaking that each of us have a very unique offering. Most of us are generalists. You do something very unique. When you were explaining to me, you specialize on LinkedIn, especially with CEOs. Do you want to elaborate more on why you do that and what is unique with that specific platform?
Sure, thank you. And I only offer to you what's worked for me. Thank God I've had 3 reasonable size exits, and all of the companies were built through LinkedIn. I think that if everybody in this room looks around, person to the left, person to the right, you want to find somebody that's a thought leader in their category. And through LinkedIn, I'll let you in on a secret. I'm probably the most antisocial guy in this room. If I could pretend to be on my phone in the corner instead of walking up to a stranger, I probably would. But over the years, LinkedIn has given me that platform where I can offer value and connect to the right people. So, we live in an instant gratification world where nobody really has the patience anymore to go to the website, about us, who you are, bio. So the people that you meet today, what's going to happen is you're going to go back to your rooms and your offices and you're going to Google each other. And the first thing that's going to come up is your LinkedIn profile. So that gives you about 7 seconds to impress. Oh, this guy's a thought leader. He's got articles, he's got graphics, he's got content. Or it's generic and gray, and you're like, I'll find somebody else to invest in. And so over the last 5 years, we've focused strictly on LinkedIn for CEOs or executives to really help them reach the objectives that they're looking for.
And if I may validate that, Seth is one of the few people that has more followers than I do. He's too shy. Like, I mean, brag a little bit. Like, Seth is a thought leader. I follow Seth on LinkedIn. His posts are amazing. If I were to have anybody manage my LinkedIn profile besides myself, it'd be this guy.
Thank you. I'll pay you later.
Jason, you have a very interesting background. I would say you're the most intellectual one of all of us here. Would you please tell them a bit more on what you've been doing and how is bringing value to the crowdfunding world?
Yeah, so most recent research looking at it was on investors' motivation, especially through the self-determination lens, the idea of intrinsic versus extrinsic motivation. And as we did the last study, about 320 participants or investors in crowdfunding campaigns, 40% of them did not list financial profit as one of their top 3 motivators for investing. So of the 100 people who may invest, 40 of them, I don't want to say don't care about money, that's not what we saw, but it was way down their list. They cared about themselves learning about the system, about empowering entrepreneurs, about being part of a community. Now, when we got a little bit deeper in that, your professional investors, your previously accredited investors, they were higher up on the financial profit, which would make sense. Those are the people who are using Reg A+ or Reg CF just as a different tool to invest. But now that we're open to all of these non-accredited investors, people whose first exposure may have been through Indiegogo or Kickstarter, as they come over to the Reg CF or Reg A+ platforms, they still have those same motivations. They're the ones who really care about the story. They want to see the narrative. They want to care about the founders, the mission, and all of that is what's involved. So building up that sense of community, those connections, is what bring those investors in. And while they may be the smaller dollar items compared to your big $25,000, $50,000, $100,000 checks, there's a lot more of those people, and that part of the investor pool is growing.
So if I may ask, like, as you stated, 40% financials, for them, finances are not the motivation per se, it's more of a passion play. How would an issuer or these companies stand out? If, let's say, everybody's doing the same thing, or did you find in your analysis any specific nuggets that help one be more differentiated than the other?
Yeah, one of the things we saw when looking at it, it wasn't so much including or not including information, but where you emphasize and in what order. So if you're going to these investors, these non-accredited investors, and you're leading with a financial pitch, you're leading with your ROI numbers, you're leading with talk of cap tables and all of this stuff that, frankly, they don't necessarily understand, they're going to go to the wayside. It's those investors who you want to lead with the strong story, the sense of community, the narrative force of it. So it's not about adding or removing pieces. It's about how you structure and where you emphasize. And if you're looking at raising in parallel tracks, it may be worth having parallel pitches. Not that you're changing information, but you're changing your emphasis and your order, depending on what crowd you're speaking to.
Thank you. David, you have a unique experience as you started your career specifically in the public market side. And you do still work with many public companies. What learnings have you had with those type of companies that you've brought to the crowdfunding world that you think make a difference?
So as an investment banker, and don't hold that against me if you had some bad experiences, but as an investment banker, your goal is to build, present, model, create a story. What is the value prop of a company that's doing their first S1 IPO, following offerings? So really learning the minutia of like how to tell a company story. And so the science of what I call B2I digital marketing is really investor-focused digital marketing. It's really whether you're doing a public company that wants to just do a follow-on offering or keep liquidity and volume in the markets, or doing a Reg CF, Reg A, Reg D5 or 6C. It's the same science of having that story. But as a banker and coming up from being an analyst, you learn how to know the details, enough minutia to be able to summarize it, to get that quick pitch story of like, how do you sell a deal? If you're an investment banker, you gotta convince the committee at the bank, hey, here's why we should back and underwrite this deal. You gotta talk to the retail reps. Here's why people should, in your book, invest in this company. So you learn really fast what makes a company's story compelling as an investment banker. And I always summarize that there are the 3 M's of what you want to tell in your story, in your pitch deck, on your website. 3 M's are the market potential, the management team, and the money. And I was very intrigued by your research about the emotional impact. And as an investment banker, I'm like, wow, that's very eye-opening, and I'm going to consider that more thoughtfully when I do my marketing as well. That's really kind of what I took away from my, decades in banking experience.
Thank you, David. Jason, for long I've known you, you're most well-versed in all the data and statistics in this space. What have you seen once you launch a campaign? What are the numbers that have stood out to you and that makes these campaigns successful and allows companies to differentiate themselves?
Sure, the only way to measure is with numbers, so we want to get a firm understanding of what's occurring. And through the analytics of our own campaigns, as well as what else is occurring in the space. So I go on to King's Crowd every Monday morning, I look at their Saturday report, and I see what campaigns are doing, who raised the most, and I try to fill in the blanks on why. Success leaves clues, and we're going to be going after the same audiences with our campaigns. So I believe, it's an underutilized resource. And there's many others in the space, Crowdfund Capital Advisors, there's other groups in the space. Wherever you're getting the data from, you want to be able to see what the same investors you're going to be pitching are seeing on their social feeds, in their emails that day. I mean, I break it down to have an understanding of what they're running as social advertising, what they're running as search advertising, what they're ranking for on search, which publishers are talking about them, which influencers or social pages as a whole are talking about them, what they're sending out as an email, what paid email newsletters they're being featured by. Again, I want to know everything that they're doing to obtain digital market share. So I'm not just looking at a number on that report that week and saying, hey, they raised $821,000 last week, as much as being able to tell a story as to why, so I can incorporate it into our strategies and into our plans. And when I'm looking at an offering page, when I'm speaking to a prospective issuer, I want to have an understanding of where they're going to be getting their traffic from. How large is your audience? 1,000 people in an email list, 10,000, 100,000, 1 million social pages with the collective audience of 30 million. What type of engagement levels are you anticipating? How much traffic can you count on from those lists? And then I want to fill in the blank with other sources that are consistent. Advertising has been dependable for us. We've built databases of historical regulated investment crowdfunding investors. That is the term that we're pushing to use at the Crowdfund Professionals Association, regulated investment crowdfunding. And I have databases, portals, where they invested, how many deals they invested on, can upload those as custom audiences, but I need to fill in the blank with the algorithms. So on a Reg CF, 50,000 investors per every $1 million raised is the round figure that I use. And per your question, Manuj, that reflects a 2% conversion rate. Google says an average conversion rate is about 2.35%. You're getting 2% on an investment, you're in a pretty good spot. That reflects a $1,000 average investment value. In 2023, Reg CF was about $1,190 average investment. Using a tech platform, Dealmaker, Dalmore, maybe you're seeing a $3,000 average investment. You're still only getting $3 million in capital from those 50,000 visitors. So you need to figure out and play a scenario of how you're getting to 50,000, 250,000, 2.5 million visitors to that offering page while continually managing your conversion rate optimization. The conversion rate is going to be the single most important metric to your page. You could drive all of the people in the world to it, and if it's not converting, it's not going to do anything for you. So you want to be gauging that all the way through and be able to answer these questions. Your average investment value, where it's coming from. Is it audience 3, creative 2 of your ad sets? Is it LinkedIn? I heard some great notes on LinkedIn on the last panel, and which audiences. you want to be able to tell message 3, this is where we really get them, and continue optimizing until you get points to where you could scale, and then lean into it because you're facing a time clock. A lot more metrics. I don't want to take too much time on the mic that you could talk about which stage of the campaign you need to hit which milestones by. The last thing I would emphasize is just bring as much capital as you can as early as possible to your round to showcase social proof, third-party validation. Only half the campaigns on Reg CF that I research past 73K to date. If you look at all of the campaigns on there, so you want to pass 100K, you want to pass 500K, you want to showcase that, and from how many investors as quick as possible, because it's social dynamics at play.
Thank you. One thing I would just like to add is that it's a very simple notion. Listen to your customers. Basically, in this world, the product is your company. The investors are your customers. So, like with our firm, we provide investor outreach. People literally pick up the phones and call the investors and ask them, hey, thank you very much for showing your interest. What attracted you to this offering? And it is amazing how by just picking up the phone and talking to somebody, you learn really quickly what's working and what's not working. So it creates this offline data loop where you learn, we went down this specific channel. These people don't speak English, so they have no clue what they clicked on. Then you have to bring that back to the marketing team and saying, hey, you worked on these channels, you had great, let's say, lead generation, but it's not the ideal profile. So then this way, your marketing team can optimize, can pivot to channels that are working better, and hopefully, as Jason was stating, convert the better numbers or even higher than 2%, ideally. So it's all about continuously getting feedback, continuously willing to optimize, continuously to get better and learning, and then hopefully building the momentum to having a successful campaign. I'm going to ask this question popcorn style, so please, whoever wants to answer, they can. What should a company not do? Like we always talk about what they should do, but what are the big mistakes that stand out that they should not do, which actually can basically ruin the campaign?
Don't just put up an offering page and think it's going to get filled. Don't think an investor visiting your offering page the first time is going to convert. It's likely 7 touch points or more. Don't think they're just going to go through their own sales process and get there, or that 100% of the audience is going to convert.
So if you build it, they won't come.
Not Field of Dreams, unfortunately.
I would say don't raise capital till you're ready. Don't go on stage until you've rehearsed. Once you're in the public eye, you're getting people to give you money, make sure that your ducks are in the row, which would be LinkedIn, your website, your pitch deck. Make sure you're ready before you raise capital. A lot of people just go up, got a WeFunder page, starting a page, great. But then they go to your website, and what do they see? A 1980s brochure. Not going to help you out there.
I would just say 2 points. One is a pet peeve of mine from Shark Tank. When somebody gets up there and says, but it's a $20 billion industry, and if I just get 1%, like as soon as I hear that, I'm out. That's number one. And number two is, and everybody here has probably seen the same thing. Very often, founders or CEOs will think that, well, I put out a press release, so why isn't my stock trading? Or I put out a press release, why isn't anybody knocking down my door? And it's just that constant reminder that it's jab, 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 jab. And you have to constantly put out updates and news. And let's face it, a company may not have news every day, every week, or every quarter. And so you have to then put out information about your industry or about the product as a whole. It's not always about you. Very often I've seen companies fail because they just I don't get it. I put out a press release and I hear crickets. It's a lot more involved than that.
I'd say a little bit with what Jason was saying on that social proof. They go into the raise without a plan to get to that social proof. Because those first few days, that first week, getting people committed, showing that you have investors backing you, money behind it, that's huge. And if you don't have a plan, and honestly, in my raises, cheat. Already have that lined up. Have those as the first people in. So day one, you're starting to show the numbers. You've had the social proof. So when everyone else hits that page, they're not going to be the first money in. They're not the ones taking the risk on you. They're following along, especially if it's with an investor or a person they trust. So they're coming along second. It lowers their view of risk, and it's easier to get them to click that invest button.
Given that, what are your gentlemen's opinion about the whole testing the waters opportunity? Some like it, some don't. Have you leveraged it? What type of results you've seen?
My thoughts are, testing the waters is a great concept, great survey, gives you some data. Rely on it to a certain degree, but balance that with reality. Oh yeah, count me in for $1 million, count me in for $10,000. What people say on a survey, and you say like, oh great, can I get your check? Where's the wire? Oh, it got lost in the wire. It doesn't get lost in the wire. So take it for what it's worth. It's a survey, and it can give you an inkling. If no one says they're going to invest, bad sign. Everyone says they're going to invest, good sign. But just take it with a grain or two or $1 or $2 of salt before you rely solely on that and wonder why you're not raising money. That's my only thought on that.
I'm a big fan of pre-launch marketing and audience building. I was using the audience predictor point earlier. The thing to note for test the waters, 10 to 30% of your reservations will actualize into investments in your campaign. And I would still buy retargeting advertising to get more of those people who said, yeah, I'll come to your barbecue, and then you're reminding them the day before on the time. And look, it takes a lot of follow-ups, so don't think just because they made a reservation they're going to invest in. We have a Regulation A Plus campaign. It's about $6.3 million right now in Test the Waters. If they surpass that 30% mark, be a good foundation for the rest of their campaign. Don't anticipate closing around just on what's happening there. Social proof. Social dynamics at play. I use a lot of analogies towards this. Was talking about the pool party and being the first in the pool on a conversation earlier. The one I use the most is the line around the block. You go to one of the FINRA-regulated portals and you see movement on their top campaigns, and then you see other campaigns that they may be hidden. You may need to keep pressing load more, but that have next to nothing raised. You do not want the empty restaurant sensation next to your campaign. So whether you're doing a test the waters, whether you're doing audience building, that's not considered priming, not considered, talking about the deal too early, it's compliant, but you're doing audience building. You want to be ahead of the ball in terms of how you're getting audiences there day one, week one. You could study reward crowdfund fundamentals and learn how important those first stages are. But you want to have the line around the block, the place that people want to eat at, they don't even know what they serve, versus the empty restaurant where they're questioning the validity of the product, of the offering, if there's something they don't understand. So getting people through Test the Waters to participate early is a good vehicle. Just don't expect too much of what's formally going to come out of it. It's also great for market testing and seeing what your audience is responding to in terms of messaging.
For Test the Waters, my point of view, it's basically what the name is. It's a test. And on a strategic point of view, I think there's only three ways of looking at it. Either you have a product market fit and the testing gives you positive results. So say, great, good feedback, as Jason, David were talking about. Okay, let's move forward. Number two, so-so, it's a meh. Something not positive results, a bit mixed, go back to the drawing board. Okay, is it the branding, is it the messaging? Is it our business plan? Like really take a hard look at yourself as why are you not getting the impact that you were expecting? And then finally, your deal sucks. It's truly, like there's no product market fit. It doesn't resonate with the investors. There is no appetite. So just cut the cord, walk away, roll with the punch, take your punches and leave. So that's where I believe where testing the waters becomes very valuable, because if with those three types of decisions, you can know you either put more dollars in or like people who just walk away. We have about 11 and a half minutes left. Let's open it up for questions. Phil, if you can bring the mic around and the crowd can ask these fine gentlemen any questions.
Seth, I believe. Forgot your names. You were talking about how you basically did all this on LinkedIn. Just elaborate a bit on how you are doing that in such a way that you are getting the message across without basically, I don't know how to describe this, creating noise.
Being cheesy?
You create enough noise and people are just skipping over you, at least
Sure.
I do.
Sure. No, it's
So how do you make that work without creating noise?
It's a great question. You know, for the CEOs that we work with, at any given time, it's between 75 and 100 CEOs. You know, I tell them the same thing that I tell my kids, that relationships are everything. So the goal is to create relationships, and we do that certainly by building up the profile, but then it's really just two elements, and it's not rocket science. Anybody could do it if you have an extra, 20, 30 hours in your week. But the first is connections. So I might have a company that just raised 40 million, and they don't need money, but he's a med tech guy, and he says, connect me to every neurosurgeon, every brain surgeon, and every back surgeon in the country. And that's, boom. So now we're getting him his audience. On the capital market side, we've got a crypto company. They have a specific focus on gold. So connect me to every family office, every private investor, every emerging growth investor, every token investor, every coin investor. So we're curating an audience is step one. And then step number two is providing content 2, 3, 4 times a week. You can't look at LinkedIn anymore as a job site or looking for resumes. And if you're posting authentic content about your journey or about your company or about your updates 2 to 4 times a week, times X thousands of curated connections, you're basically giving a TED Talks 5 days a week, getting in front of an extra 50, 60, 70,000 eyeballs a month on your story, your message. And then if you're providing the content of real value, and it has to be authentic, what will happen is that you'll have a lot of garbage coming in at you, but you will have people saying, hey, I liked your post the other day, can we set up a call? Or after some time, you can do that outreach. Nothing cheesy, salesy, aggressive, just saying, thanks for the connection. I see we're both in the capital markets. We'd love to set up a call. And what happens is that you organically, without any paid media, you organically become a thought leader in that category. And that's really what people want to see, I think, is that when they're checking out a company, they're checking out the face in front of the company, that CEO. And if you're positioned as a thought leader, that's the type of company people want to invest in. And so we try to do it very organically and very targeted.
So you were calling out some metrics on average amount raised. Any thoughts on average customer acquisition costs for the typical Reg CF campaign today on paid media?
$100, $100 to $200 if you're hitting with pixel data is a good place to be. If you're hitting $1,000 average investment value, it's a 5 to 10x return on ad spend right there. If you're getting 20 to 50% of your conversions from paid traffic sources, and then peer-to-peer marketing, organic is pushing the other levels, kind of a rising tides lifts all ships, and all the channels kind of complement each other anyway. An audience may see an email, an advertisement, an article, a webinar, and then invest. But if you're in that level, you're pretty good. There's a whole other conversation about pixel tracking and what we're able to see, who's opting in to allow Facebook and Instagram and some of these other mobile apps to track them off app, and what you're not getting. There are advanced analytics systems where you could get a better sense of what's occurring, but those are the numbers that you want to shoot for.
Here you go, Gene.
We've all seen offerings that don't work. What can you do when you have an offering? This is for any of you. What can you do when you see an offering is not working? What do any of you do when you see something like that?
Well, we've gone through that numerous times, and I tell them I think they should walk away. At the end of the day, they make a proper business decision for themselves. And then there could be multiple reasons why a campaign doesn't work. Could be the pricing, the offering, we're in a poor economy, it doesn't resonate. And if I agree, as founders, you're passionate about your business, you really believe in it, you've put everything you have into it, and it may not resonate on an investment point of view. The business might work, but on an investment point of view, it doesn't. You've thrown tons of money into it, just put your ego aside and say, okay, we don't have any more reasons to throw at this, we have to find other opportunities, other options. And we've seen clients that started with a Reg A, went to an investment bank, they were more successful, and they had an IPO. So there's so many other opportunities there to raise capital if crowdfunding's not working.
I think does not work is vague. I've had issuers tell me their campaign's not working, and I find out they've been live for 2 days. I have issuers tell me their campaign's not working, but they have less than 1,000 visitors to their offering page. There's no conclusive data to work off of. Productive question, what can you do? Test, optimize, scale. That's my motto, right? Optimize. Apparently we need to get in touch with Manuj's mom and have her invest. But friends and family, I mean that wholeheartedly.
She likes you, Jason.
Okay, excellent. There we go. I could be the connector. But I would highly encourage you to, I heard it said in the last panel, go back to everyone you've ever talked to, everyone you know, get them to invest at any level, get them to share, because that traction is going to be the largest validator. If every time a prospective audience member gets to the offering page, there's more invested from more investors, it's going to say something in a very loud fashion, which is the opposite on a campaign that's not working. They're getting there and it's always the same thing. It feels off. There's no new content. We don't know what the founder looks like in some cases. From a more systematic standpoint, after bringing in your audiences to a greater degree and trying to reach them with more channels, I break it down to your marketing channels, and then inside those channels, audience, creative, and funnel. Who are we targeting? What are we targeting them with? And where are we taking them? Maybe they're not ready to invest. Maybe we want to invite them to a webinar or provide a piece of content, get their email address. Now we could send emails to them. We could point out all the great things that are going on and showcasing momentum. I've worked on a lot of these campaigns. I've learned more from the campaigns that have not worked. And it's a matter of rolling out new tests, optimizing towards pockets of performance, and scaling it up and rapidly once you see it delivering.
Something I want.
Last thing, I apologize. I've worked with campaigns that were quitting equity crowdfunding. $35,000 raised. I'll never forget one. It was $105,000 raised. A portal called us, said, we don't like working with the guy. His campaign's not going anywhere. It's been 2 months. They'd already told him what Manuj said of, hey, give it up, figure out something else. We ran advertising, saw a 2-3x return. Story's turned into a longer version, but here the end metric. They capped out their Reg CF 6 months later, and they do early detection of cancer and heart disease. When I go to their location, they show me people's lives they've saved. Literally, this isn't just a sob story. And they said we were going to go out of business. We continued equity crowdfunding. So I'll speak to groups. I'll work with groups that are plateaued. I don't say not working. They're plateaued for those reasons. That's what's in the background for me.
What I emphasize is the importance of what Manuj does. Manuj is helping to moderate the panel and keep us all on track, but there's marketing and sales. So a lot of people on the stage in this room do marketing. What Manuj does is that hand-to-hand combat, and God bless his soul, with investors, emails them, calls them, individual outreach. That would make the upsell. They came in, they inquired, they didn't invest. They came in and put in $500. Manuj, one of his IR reps calls and says, hey, we know you put in $500. You want to know more about the company. That $500 goes to $5,000. One time I did a concurrent raise where us and a portal were doing a raise. We had people calling. They did not. Our ticket size was 10x their ticket size on average. So I don't think Manuj gave enough credit to the hard work him and his team do. And that is the bottom of the funnel of conversion is, hi, thank you for your interest. Thank you for your $100. I see you are a $5 million portfolio owner. What are you doing with $100? Give us $10,000, $50,000. So just give me a little credit, Manuj. Thank you for all your hard work.
Thank you, sir. Perfect.
If an issuer has a consumer-facing product or service, is it ever a good idea to simultaneously market the offering, the stock, with the product or service in the same ad, whether it's digital or otherwise?
If I can say, I believe the SEC doesn't allow that. You have to keep your sales track and your investment track separate. Can anybody else?
So that is that a no?
I'll say no. You. Yeah, but the gentleman's talking about the sales of the product specifically. So. All right. The lady in the corner answered the question. Thank you.
And yes, you should, because you're getting double the marketing dollars for your ads.
But not under CF.
But not under CF.
Any other question? Anybody?
That question touches legal. I don't want to touch it at all.
We are out of time.
Actually, Phil, can Seymour answer one question?
Okay,
for the
sure.
last
One more
question?
question.
It's a very simple final one. Ethan, what's the alternative? Seth, what's the alternative to the 1% illustration that is so clear and everybody understands it, but we hear that immediately investors are turned off by it, even though it's
It's
such a
okay to
simple thing
say
to understand?
the market opportunity, I think, but you have to show a clear pathway to get there.
Sure.
Show them that you've done the homework, and it's not just a made-up number. If I'm going to get there, show them how you're going to get there, and it resolves the problem.
Okay.
Still a fan of Shark Tank, though.
Thank you, everybody. I believe there'll be a networking component. Please meet these gentlemen. They're awesome people, and I think you'll enjoy the conversation furthermore.